So let's get going here. Busy time, busy day, busy week. Short week for the market. Today is Tuesday. Only a 4-day week, but it is earnings season. Okay. So we're going to talk today about gaps. We're going to talk about what I do. I have a class this weekend. If you're interested, you can email me at melissa@thestockswoosh.com. If you want to sign up for the class this weekend, I'll just put this in the room here. Or if you have questions when we're done. Everybody see it? Everybody see the slide? Ready to go? Oh, beautiful. So let's talk about the power of trading gaps. Again, if you have questions, you can always email me, call me. I appear on TV. I talk about the stock market, the economy, and it's going to be a very exciting year to trade because we have a new administration. There's a high expectations that things are going to change in reference to the market this year. And again, with a lot of companies as well. So it's going to be really interesting to see how everything flushes out. If you have questions, you can email me at melissa@thestockswoosh.com. You can call me, like I said, at 929-3200-GAP. You can follow me at X, Facebook, YouTube, or Skype. So here we are. 2025 is here. I cannot believe that it is almost February. Tomorrow is the 22nd. In 9 days, it will be February, which is crazy. The year already feels like it is flying by. So if you're the type of person like I am, I'm a very goal-oriented person. I make lists. I have a lot of stickies. I make lists, what I'm going to do today, what I'm going to do this week, what I'm going to do this month. I like to write stuff down, okay? Writing things down helps you become accountable to yourself, particularly when you have goals, okay? And I mean specific goals, like you could say to yourself, I want to make $2,000 a week. I want to make 150 grand before the end of the year. Thomas can't hear me. Can everybody else hear me? I'm talking. Hello. Can everybody hear me? Thomas, if you want to sign in and sign out, can sign in and out if you can't hear me. I don't know what's going on. Okay, everybody else can hear me. Good. All right, getting back on track to what I was saying. You need a plan of action to achieve these goals. Just like if you were going on a diet. January is every time you watch TV now, it's commercial for diets and exercise gyms. January's after the holidays is always a big time. How are you going to lose the weight? How are you going to get into shape? You know, it's a good time to get organized, get a plan of action, and it's best to do this as early as possible to ensure your success. And I really think this year is going to be big. And I'm not saying that because I think the market rallies every day this year. I'm not saying that at all. Someone emailed me this morning that's trading options with me, and he said, what's going to happen with tariffs? I said, I have no idea. I don't know. I don't have a crystal ball. But I think this year is going to be volatile. But volatility is something that if you know how to trade it, you can make a lot of money. But I think it's going to be one of those years, if you're the type of person who likes to buy dips or, you know, do swing trading, you may have a very stressful year. Because I don't think it's going to be easy peasy that the market's just going to keep going up every second this year. You know what? The market really had a nice rally in 2023 and 2024. It was very, very bullish. Easy to swing trade if you were going long with the direction of the market. Okay. Any questions? Does everyone know how to chat? I've seen chats here just to review for the people that came in late. You go down to the bottom. Okay. Getting back to what I was saying, are you ready for 2025? And if you're not, you still have time to get ready. Take this day, take this week, just take an hour out of your schedule. What are you going to do differently this year to have a more successful year? And again, a lot of times at the beginning of the year, people are very optimistic about their goals. And you need to, like I said, have a plan of action to achieve those goals. So here was the end of 2024. The last time the market made a brand new all-time high was right before we had the Fed announcement. It was December 16th. So this is a daily chart of the QQQs. Again, we're talking about the power of trading gaps. We went long the market today. It was a nice gap up. It went, okay? So we'll talk about what a gap is more in a minute. But again, I was just discussing how bullish the market was, particularly after the election. Go back here, November 6th, see where the market was, roughly around 500-ish, okay? And ran almost straight up 40 points. And we've been sluggish kind of at the end of December, beginning of this year. Now things could change. Things could change. That's what we're watching. Any questions here so far? Everybody can hear me, but Thomas, he's going to log back in. Everybody else okay? Okay. So, like I was saying, having a plan helps you achieve your goals. So if you go back and look at 2024, these were our stats and results for last year in the day trade room. I run a live room. We're going to talk about today's trade. I trade every day in the room if I have a good trade, okay? I risk an average of around $3,500 per trade on margin trades. So last year I made $901,138. These are trades in the room that I called. You have to be there live to get the trades. This year I would like to do as good or better, okay? So again, sometimes you got to look at it and you just have to say, am I ready to step up my risk? If you're not, that's okay. You can be honest with yourself. But if you were going to step up your risk, the time of the year to do it is now. Why? Because it's earnings season. So these were our stats for the end of last year, the whole year. 288 trades. Again, this is in the room. 194 winners, 89 losers, and 5 break-even trades. My win ratio was 69%, which is good. So for every 10 trades you take with me in the room, figure 7 are going to work and 3 are going to lose. Okay, sometimes it feels like we're on a hot streak and every trade is working, but you have to prepare for the fact that some trades will lose, and that's why I use a stop. And again, I discussed that in the class, okay? Now for my options, for those of you that love options, I do options too, but I'm risking more. So these were the stats for last year for the options newsletter. 3.8 million plus for the year. Many trades that I do in the options newsletter are a mix of calls and puts, but in the room we're mostly shorting, just so you know, okay? And again, the trading room trades are trades on margin, they're not options. I risk around an 8,000 to 9,000 a trade for my options. You don't have to risk that much. It's an advanced trader risk. You can risk less. It's a very active letter. Some of you are trading with me, you know that. So there were 509 trades, 352 winners, 152 losers, 5 break-evens, and the win ratio, again, was 70%. So again, that's why you have to size yourself. If your sizing is not consistent, your results will not be consistent. So it's very important to do that. And again, when you're new, I said there's nothing wrong with starting out one contract. Okay. Tanya, are you in here? I know you emailed me today. I see you. If I don't call you back today, I will call you tomorrow. If you have an account set up, E-Trade, Schwab, whatever, that's a broker. That is a broker, Tanya. So you know that. And again, you can trade wherever you want to trade, but you have to have your account set up properly to do options, or you have to set it up properly. If you want to do day trades, you have to have it set up as a margin account. Now, if you're going prop, you can open up a margin account with $5,000, sometimes less, and get 10-to-1 margin. If you want to go retail, you're going to need $25,000, and you're going to get 4-to-1 margin at any of the places I just said, like Schwab or E-Trade, okay? You don't necessarily have to have your account up before the class. Like I said, the class is this weekend. You don't have to have it set up before then. Learning is more important. You can trade in a demo and start trading live after the class, but if you have an account now and you don't have it set up to do options, you have to get it set up, fill out paperwork, okay? And any questions about that, let me know. Again, the total results for this year were over, or last year, I'm sorry, was over 4.7 million. So we had a good year. Again, that's a combination of options and day trades, but you don't have to do both. If you want to just do one thing or the other, that's fine. Okay, that's totally fine. Now, this was one of the trades that I did. Okay, this was an option that we did last week or the week before. Actually, we did 2 trades in this. Can everybody see it? This is JPM. So we're here today to talk about the power of gaps. Let's talk about it. So what is a gap? A gap is the difference between the close and the open. So I'm going to go back. The close is always 4. The open is always 9:30. Again, I'm in New York. Eastern Standard Time is when the market closes and opens. So this is a bullish gap that happened in JPM last week. Closed here, gapped up, rallied, boom. Took off like a rocket here on Friday. Dream target was 260, got there, got through there today. Actually, I didn't even have today in here. We were over 260 today. So this was a bullish gap. Everybody see that? Let's talk about a bearish gap. I'm going to go back here. This was November. Stock closed here, gap down. Closed at 4 o'clock, open at 9:30, lower. So this was a bearish gap. Technically, you could have shorted this. And if you did, you made money. Okay, here was a long. Boom. Okay. And again, you can take this as a day trade. You can take it as an option. Okay. So, here was the trade. I put it in here. This was one of the first trades of the year. January 6th, I called the 250 calls that expired last Friday in JPM. It was a good solid trade. The cost was relatively cheap when you consider the price of the stock. So this is why people love to do options. So again, I'm trading options based on the gap. Cost was $2, 40 contracts, risk was $8,000. This is an advanced trader risk, sold at $675. Profit was $19,000. Return on investment was 238%. What if you took less? What if you took 5? What if you took 1? What if you took 1 contract? Okay, you still could have made $475. And again, if you risked 1,000, you could have made $23.75. So this is a way, again, to take, smaller sized accounts and build them up. You follow me? By doing options. Again, let's go back to Monday the 6th. I'm here. Okay. Boom. Got the rally up. So again, this is a call, which is a long. Okay. And any questions, let me know. So again, in order to become successful in the market, you have to become a specialist in one specific strategy, a strategy that reads institutional money, or what I call power money in the market. This brings momentum and opportunity. Every trader at every level must learn this skill set, and it can be acquired through education. Again, it's winter here in New York. It's very cold. It's almost too cold to even go outside right now. Tomorrow is going to be even colder. I did have to go out for a little bit today. The winter time is actually a good time to learn. It's a good time to buckle down, do a lot of reading, and again, take classes and beef up on your education, because you don't really want to go outside this time of the year, especially if you live in a cold environment. It's a time to learn and understand what's going on. Now, we were talking about options. Again, this was an option I called last month in Tesla. This was absolutely crazy last year. Now, Tesla does not have earnings this week. Tesla has earnings, I think, next week. I don't know what it's going to do, but it has earnings. Again, this is earnings season when stocks report their quarterly earnings. We did the Tesla 400 calls. I called this on 12.6. We're going to look at the gap. So 12.6 was here. See it? Take it over. So the stock was around a little bit under 380. Closed here, gapped up, rallied. Boom. The stock almost went 100 points from there. Insane move. So this was the biggest trade we had in December. 967% return on investment. Again, if you risked 2 contracts or $1,500, you could have made $14,500 of this trade. This was not the best exit. I did not hold this to the 18th. Again, even if you held it to the 20th, though, you were still up a lot of money. To take something like this and pay 7 something to get out at 80 something is fantastic. And I do think we're going to see more trades like this year. So again, if you had risked 9,000, you could have made 87 grand. I had 2 people that made over 100 grand in this stock actually alone in the month of December with me. Again, we played this rally. We played this whole thing. So again, when somebody says, well, I have a small account, I can't do it. You could have taken 1. Okay, you could have risked $750 and made over 7 grand. So it's not about the sizing. It's obviously if you risk more, you're going to make more. But if you risk more, you don't know what you're doing, you're going to lose more. So what's the difference? The difference is knowing what to do. Taking a small account, building it up, chunking it out is what I call it, and learning as you go. And I think it's more important for people to take it slow while they're learning, while they're doing it. So again, I was saying earnings season is going on now. What does that mean? What's the significance? It's the best time to trade. It's the best time to trade because stocks have big moves. Again, the power of the gap is that you will have a large move if you get a good gap. Now, that does not mean that every stock that gaps has a big move, because not every gap is a good gap. Not every gap is what I call a predictable or playable gap, whether bullish or bearish. But you tend to have big moves on earnings. Okay? Not every gap on earnings, though, is good. Not every gap on earnings can you do in the reverse. Not every gap on earnings can you do in the right direction. Any questions here as we're going along? I see some new people. I see some familiar faces. Hello, Thomas, can you hear me? I saw you close. You came back in. Okay, I'm here if you have questions. Anyways, how can you do this? Say this is your goal. This is your life. You want to do it. Again, when I decided to trade, I really threw myself into it. I had a full-time job doing mortgages, but I 100% threw myself into trading because I really wanted to get it, and I wanted to change careers, and I wanted to work from home. And at that time, it was way before everybody else was working from home. Now it's like, more people are working from home than not. But not everybody is earning a good living from home. And you also see that a lot of places, a lot of companies now, especially in 2025, are forcing people to go back to work in the office. And if you're one of those people that don't want to do that, then you have to find an alternative career. So how can you earn a living trading? Number one, you need a winning strategy. Number two, you need a supportive mentor. And number three, you have to become an expert in one thing. And my expertise is in gaps. I'm particularly reading price action. Again, learning is key. I don't know what happens. I said this before in a webinar the other day. After a certain age, people tend not to want the education. They just want to take trades blindly. It's not the right thing to do, because if I decide to retire, which I'm going to do early, then how will you ever know what to do without me? You won't, okay? So you don't want to be blind taking trades for lots of reasons. You want to be able to do it on your own. You want to be independent. And on top of that, you actually want to have the conviction, the same conviction I do. If I take Tesla and I'm saying it's going to 500, it's going to 500, hold it, hold it, hold it, and the stock is up, which it was up for days, well before that spike, if you understand what's going on, if you really comprehend it, you'll be able to cash out and also hold trades longer. And then when something's wiggly jiggly and it's down before it goes, you'll also be able to hold it. Why? Because you understand what's going on. So there's just no substitute for learning, no matter how you look at it. And I think it's one of the things that a lot of places overlook, because there's so many places out there selling subscriptions, competitors of mine, and people just want to take trades blind. It's never going to get you where you want to be if in fact you really want to do this and get serious about it. If you risk options in the entire position, how do you end up with break-even trades? Because I could take a trade and the trade could be down all week and then it could go the last day. In fact, this actually happened last week. I got out of it almost break even. So I was in a Tesla call that expired last Friday. I forget the day I called it. I think I called it here. Actually, I think I called it here. And it was down literally every day until Friday. And I ended up getting out of it almost break even. I took a slight, tiny loss because I just said, you know what, this is good enough. I was down in the trade for 2 weeks. So there, that's how. And actually, if I had held it, I think up to the high, I think I could have squeezed it out, break even completely. But I was like, I mean, when you're in something and it never goes right, which this did not for me from the moment that I took the trade, I will play it out to the last day. And I got to be honest with you, this could have, it almost got over 440. 440 was a dream target Friday. It basically got there, but it could have gone to 450. So if it had, it was a late one here. But if this had gone to 450, like earlier in the day, I would have made money in it after being down in it every single day that I took the trade. So that's a great example. But there are many examples where I could take a trade and then it could be down and then I could be up. So, I never kill anything. So that just is a recent example, actually. That was really something, actually. I was watching that. I was like, oh my God, this is going to go green. And then I just said, oh, this is crazy. And then I killed it with a small loss. But it was basically such a small loss that to me it was break even. Okay, so how do you make money in the market? Look at what you're doing and determine exactly who is in control. You only have one of two choices. You have the bulls or the bears. So it's very rare something would have no control. And when it does, actually, you don't even want to be in it. So if there's no control, if you can't read the control, if you can't say, oh, it's 100% the bulls or it's 100% the bears, guess what? You shouldn't be in the trade. You know what I'm saying? Because it could be a tug of war going on. But if you can determine who's in control, then you play it in the direction of the control. It's that easy. Now, what many people struggle with is determining the control. And how do I do that? By reading the gap. But again, it's very simplistic when you think about it. How do you make money in the market? You have to get the direction right to win. If you get the direction wrong, you're going to lose. Period. End of story. End of story. And I think it's going to be the most difficult thing for people for this calendar year. I'm talking about 2025. People are going to read the market and they're going to say, we're bearish, and they're going to short, and it's really not bearish. Or people are going to say we're bullish, and they're going to go long, and then they're going to lose, and we're going to fall. Like it's like very predictable what's going to happen this year. And again, even though we're in a new administration, it doesn't mean we're going to rally every day or fall off the cliff every day because of tariffs. But there's going to be chop. We already saw that actually the first, I'd say, 10 days of this year. Okay. And actually, that's one of the reasons that Tesla didn't go. If the market hadn't sold off like it did that first week, that Tesla would have gone, and I would have made money in that Tesla. So, but again, it was choppy the first week. Okay, so again, let's talk about what is a gap. This is a chart of AMD. This is a bearish gap. So again, let's lose my pointer here. Market closes at 4. AMD closed here at 4. Gap down here at 9:30. Opened, rallied, fell, closed. Closed here, gap down, fell, boom. So again, in this case here, you would have shorted it. You could have done a put. You could have bought the put here, could have held it, or you could have just done a day trade, got in and out, done, boom, called it a day. But again, if you went long here, you would have lost. I mean, there's no way you could have made money at all. So again, number one, you need a strategy. And obviously it has to have more winners than losers. So anyways, what is a strategy? Mine is called gaps. And I termed my name golden gaps. What is a gap? A stock gaps when the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. So almost everything gaps. Something could gap down a penny, and that counts. That's a gap. Okay? It doesn't mean I'm doing every gap, though. Now, here was a bullish gap. This was Dow. Stock closed here, gapped up. Rallied. This was earnings. It was the 10th. Okay, this was January. It was a Monday. It was last week, actually. And here's a bearish gap. Target. Stock closed here, gap down. So closed up here around 155-ish or whatever. Opened down here in the morning around 128-ish. This was the 20th of November. Actually, this was earnings. It was like the last earnings season, end of 2024. But anyways, this is an example of a bearish gap. And this is an example of a bullish gap. Okay? And both of those worked. So what do I mean by a golden gap? A golden gap is a gap that rates 20 points or more per the Golden Gap 26-point rating system. You can take the trade in the direction of the gap. I'm never going against it. Say I rate it, and it doesn't get a good rating. So if I'm looking for 26 points, 20 is the cutoff. If I rate it and get 15, I'm not reversing it. I'm just not doing it at all. You could do the trade as a day trade option. Again, I like to do both. So that's your choice. It depends how much cash you have. If you're familiar with doing, options or day trades, it's totally your choice. Now here was today's. Stock closed here, gapped up. So this was a gap. Stock closed here around 76 and change. This was Schwab. Gapped up, opened in the morning. Pooh! Took off like a rocket. We went long this today. So first trade of the week, today's Tuesday, worked. It was long. And I got out of it, and nowhere near the high. Okay, I did not hold this. I like to do fast day trades, but you could have held it. I didn't do an option in it, but you could have. You could have put a call. Okay? But this is a gap. So you need a focus. So I am focused before the market even opens. I could get situated with what I want to do at 6 o'clock in the morning, 7 a.m. So again, having yourself being organized will help you not get in that crazy mode of the gambling mode that many people do before they trade. How do I do it? I go through and I rate the gap using a checklist. It's a 26-point checklist. This helps me determine the control because that's the only way I'm going to make money. And again, the rating system helps me determine that based on the point system. And this is what I teach in my class. I don't skip it. I started trading in 2008. Took me 3 years to develop my system, to figure the whole thing out. And I never ever skip it. So again, this keeps me in check. And that allows me to make the best trade for myself. And then people are following me in the room. So if you're in the room, I call the trade live in the room like I called Schwab today. Now, Tanya, you're new. Tanya, you're there. I know you're doing the class this weekend. Tanya, do you know how to chat? I know Tanya, oh, there you are. I know you're brand new and you're trying to figure it all out. I don't know if you did the Schwab today or not. But you saw it, and you saw me call it live, and you saw it work. Okay? So again, that helps your conviction. Helps your conviction to see things consistently work. Because everybody, even losers, make money sometimes. A lot of people are down and out about trading and the possibility of being successful because they have more losers than winners. Once you start to see green, 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 I don't even care if it's $50 a day, you'll get the conviction. It will help you move forward. And again, that emotional, positive feelings, you need that too. You know what I mean? Anyways, let's talk about gaps. Gaps happen in the market on a regular basis. However, some gaps are better than others. Some gaps are nothing gaps. In fact, more gaps are nothing gaps than gaps that are good. And some gaps are, that's true even in earnings season actually. And some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That is how you know when the power of money will flow to pay you. And power of money is so important. It's like, when you see a criminal, trying to fight off like an NYPD cop or something, and you say, well, this criminal's crazy. The cop's got a gun and 10 cops probably behind him. He doesn't have a chance. You know what I mean? Like, it's like you can't fight City Hall. When the power is there, moving in a certain direction, you go with the flow. There's no going against the flow and winning. It's not going to happen. You know what I mean? So it's the same thing with stocks. It's the same thing with the overall market. Read the footprints of institutional money and learn how to do this so that you can be successful. Okay? Tanya, I saw you coming in and out. Are you okay? Do you have sound? Do I also go through each of the 26 points every day in the stock pick on day trades to get members up to speed quickly? No, I can't possibly do that in the morning because I'm trying to find the best trade for myself and everybody in the room, and we're there to make money. So I'm not teaching, we're trading, okay? The teacher part of me is the class part of me. We'll do a review after the trade, but I don't rate every gap every single day with the room even after we trade, no. And there isn't time. But occasionally, if we have a day where we don't trade, then yeah, we will do a rating or we will do a review. We'll go over entries or targets. So that's part of the reason why the room is only for people that are eligible that have taken the class. But teacher Melissa is different than trader Melissa in my mind. In fact, I don't even talk or get on the mic till right before the open. I started doing that, I'd say maybe about 5, 6, 7 years ago. And I trade better doing that. Do you know what I'm saying? It's like when I'm on TV, I don't want to talk to anyone. I don't want to text anyone. I don't read any emails. I have in my head what I'm going to say. And then I'm live on Fox News. And then I just talk. Like I'm not thinking about anything else except for what I'm going to say in that moment. And that's the most important moment. And again, the trades happen very quickly. I didn't get a chance to put the room up for today for Schwab. But I mean, I had something today, actually, I was watching that ended up going and working. And we ended up, it was EDU, which worked. And then we ended up doing Schwab because ADU opened up late. But I mean, my focus has to be like a laser. So I'm not in that teacher mode. It's two different modes. So the morning email trade is the follow and do. The QQQs this morning. No, that was an option, Tanya. Tanya's talking about the QQQs. I called an options newsletter today, which was the Qs. We didn't go long the Qs in the room. We did Schwab in the room. Remember? So we did Schwab as a day trade. The newsletter trades are different. Now, some days they are the same, but not always. So if you wanted to do that QQ call this morning, you could have done that, Tanya. And I sent that out before the open. But in the room, we did Schwab. Okay? So if you want to do both, you do both. Now, if you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with a side of power. You need to know how to find it. That's what I do the pre-work. That's why I'm up early. Knowing how to read what institutional money looks like is essential to becoming a successful trader. And you can win big trading on the side of the power. And it's very important. And getting back to Tesla here, again, we would have had this trade last week if the market wouldn't have sold off, because I saw this was going to go. Unfortunately, it happened the very last day. And we did the 425 calls. And if this had done this, which I know that it would have if the market wouldn't have sold off, this would have been a huge trade to start out the year because it went up 15 points. But it did it on Friday. So again, I had the read. Actually, there was a trade. There were two trades, actually, that I called. I forget the dates I called them, that went today. And I should have done them out another week, but I didn't. So again, like even when I lose in an option or get out break even, 99.9999% of the time, I'm right on the call in the direction. You know, I know there's people that are doing the trades and they're doing them as swing trades and with no, set stop or whatever of the date or taking things out. I will just lose in the trade or get out break even and sometimes redo it. Now, I didn't retake the ones from last week I'm talking about because I want to focus on earnings right now this week. But again, when you go back and look at trades, even if you did a trade with me 2 weeks ago and it lost and you go back and look at the chart, you're like, holy crap, that trade worked. If I had taken it out another week or two. I just try to do the tight trades. I'm trying to do the weeklies, maybe 2 weeks, if it's a holiday or something, but sometimes you're just better off losing in it and retaking it, which I do some of the times, but not always. Okay, getting back to what I was saying, this theory, and it is a theory, and it's a good theory, that institutional money is in charge of the market and stocks at all times is what really sets me apart when I'm looking at a chart. If you understand that, you're not going to get sucked into doing things that day traders are doing. And you will also hold through trades that are down. You will not sweat a bullet. You will stop looking at your P&L. And how do you stop that? Well, number one, understand what to do so you're not worried about it. And number two, cut your risk back. Because 9 times out of 10, if you're looking at a trade and you're scared and you're worried, then you have too much risk on. And that could be you're in too many trades, or it could be you have too much money on in one trade, or you have too many trades on in one ticker. Like say you're in 3 Teslas and they're all down or something. You know what I mean? Don't be in that many trades in the same ticker symbol. Or if you're in a QQQ and a SPY, same thing, because most of the times the market indices go together. Again, let's look at a gap. So again, what is a gap? Market closed here on Friday, gapped up today is Tuesday, which all day today I keep saying it's Monday, but it's really Tuesday. But anyways, this was Friday, and then we gapped up here today. So this was a gap up. And as Tanya said, I called a call on the Qs. Now, again, let's look at a bearish gap in the market. Market closed here, gap down. This was on the 10th. Now, we did not short this, but you could have shorted it. But again, going back to the Tesla, you see here what happened to the market, and that's why that Tesla didn't go right for me, or it would have been a positive trade. Anyways, you need to have conviction when you make money, and you have to understand why. And we are human beings, and we're thoughtful human beings. And as I was discussing, people for some reason want to take trades blindly and not think, but the reality is their mind still is going all the time, spinning like a top, worried about the money or thinking about the money and thinking about their trades. Because people, really human nature is people do want to know why, and they do want to understand why. Why did this work? How did you know that Tesla would go almost to 500? How did you know to hold that trade? How did you know JPM would go? How did you know to take it into the earnings? How did you know this? How did you know that? Why? So just, come to terms with the fact that you have a brain. Your brain is spinning like a top all the time. And even though you may say, well, I'm not the best person to take classes and get focused, guess what? Figure it out and do it. And get in a space where you can grasp the understanding that you will trade better when you do know why. It's just human nature. We want a reason. Why did Trump win? Why did Harris lose? People are talking about that still now, the last 24, 48 hours, whether you're a Democrat or Republican. People want to know why, what happened. In general, people are very analytical. And in general, people are very emotional too, which is why I say to people, you can use your emotions to your advantage, but scale it down at the beginning with small size so you can, lean into your emotions once you get the grasp of it and understand the technicals, the charts, okay? Any questions here so far? Anybody else? New people, old people? Hello, is anyone there? I'm going to keep going. So anyways, let's talk about using a 26-point checklist, okay? So this is what you'll learn in the class. This is all day Saturday. The class is this weekend, January 25th, 9 a.m. to 5 p.m. Eastern Time, and Sunday, 9 to 5. It's 26 points. This is what you'll learn in the class. And again, knowledge is key. It's just so important. And the more you learn, the better you get. And then guess what? It becomes easier and easier and easier over time, and then the less stressed you are. When you are stressed, oh my God, you're not going to make the right choices. Like your brain just won't function. Do you ever hear that when people go through stress, sometimes they go through stress and then they literally can wake up and they could go gray like that. Like it's like they've aged 10, 20 years overnight. You saw that actually since we're talking about elections with Obama. In the 8 years that Obama was there, when he came into office, which he was very young, I forget how old he was when he came into office, by the time he left, he was like white. And he was so young even at that time. And now I think he's 60, 61. But he literally just, he went white. Like, it's stressful, obviously, being president of the United States. So if you can keep your stress level down as low as you possibly can, again, you can do meditation, visualization, relaxation techniques. But really, if you understand what's going on, you will be less stressed. Do you know what I'm saying? You work it through. You go back and you re-rate the gap. And you say, okay, there it is. I got it. I see now why this is doing this. Like I just explained to you. Tesla did not go right. And it had nothing to do with the gap. It had to do with the market. So then you say, okay, well, the next time it is going to go. And so on and so forth. And that helps you work through it even when you have a loser. Okay? Tanya's saying flip the lid. So let's talk about gaps. Gaps are the most powerful show of price action in a chart. Gaps have large moves. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. When I trade, I'm looking for trading momentum. And then whether you have a small size or a large size, you will get a good risk to reward. And again, we have an environment right now where the expectation is the Fed's going to lower rates this year. We'll see what they do, but we don't know. And we can't verify that, and we have no idea. It's the same thing with earnings. Well, you don't know what the Tesla earnings are going to be. No, you don't. But after you see it and you see the gap and how the stock is trading, you can make an assessment by doing the rating and then determining if you want to do it right onto the open then the day after the earnings. So these are the things that you will learn. Because again, acting fast is what you need to do when the stocks are moving fast. We saw that today with Schwab. It moved very quickly to the upside. But again, we can't see all these things ahead. We don't know. People can give their opinions. It doesn't mean it's even going to act according to what people say. Same thing with the market. So again, number one, you need a good strategy. Number two, you need a mentor. Do and follow in the room. It's up to you to focus in the class. It's up to you to ask questions. And it's up to you to do the trades. You got to size yourself right. You got to make sure you have account set up right. You got to have your chart set up right. You should be doing the ratings this morning, in the morning yourself, before you get into the room. Okay? Room opens at 9 a.m. Eastern time. Got to be on time. 9:20 is a cutoff. We trade, we're done in 5, 10, 15 minutes. Then you're off with your day. And that's the beauty also with trading for a living too. You don't have to sit at your desk till 4 o'clock. But it's a consistency. Boom, boom, boom. Again, we did Schwab, we got in, we got out. Tomorrow I'm going to get up, I'm going to do something, I'm going to get in, get out. It's day after day. You get into a habit. Again, like getting up, like I said, and exercising. You're exercising. You get up at 6 a.m. exercise from 6:30 to 7:15. You're done. Or whatever you're doing. You got to get into that habit. How many gap trades could be found on a daily basis? I'm only looking for one good day trade a day, Doug. So, you can rate as many things as you want. So I have no idea. I don't rate every single stock that's gapping every day, if that's what you're asking me. I'd never have time to trade. I'd have to get up at 3 o'clock in the morning. So I make a small watch list. I only need one, because that's all I need to make money. And I do it. So I have no idea how many you can find on a daily basis if you really wanted to scan. But if you found 100, you'd have to have the money and the cash to do 100. And then you'd also have to take all the setups at the same time. So I don't even know how you do that. It's not realistic to do 1 million at the same time. Now, there's times when I might do, in a busy time, I'm not saying every day, but I might do 10 options one day if I see something's going to happen. That even is a lot to handle, actually. You got to get the orders out, ready to go before the open, get them all set up. And I'm not getting out of those trades in 5 minutes. I'm in those trades for hours or days. But that's even a lot to do in one day. And you also have to have the cash to take them. And then you have to watch them. So I would suggest, if you really want to do XYZ, to do options. If you want to do multiple trades, you could do 2-day trades a day. More than that's a lot. They're typically setting up and going at the same time, and you have to be able to watch them and get in, get out quickly. So here was the one that we did today, Schwab. $79 was the entry, shares was 3,000, risk was 3,600, exit was 80.35, profit was 4,050. Here's the trade. Again, I got out here, snug as a bug, and look where it went. Pooh. I don't even know where this closed. I have no idea where this closed, but it went over 82. So I could have made another $2 in this. And I didn't do an option, and I could have. And if I had, it would have worked. If I had done an option, though, I definitely would have been out of this by the end of the day. This is one that I would have done it and got out today. Again, I didn't, but it's one that I would have. Now, if you had a small size, again, you could risk $1,200. Could have made $1,350. It's a good, solid trade. Again, in order to do day trades, you need a margin account. You need a margin account to do this trade. So you would have needed $79,000 in margin to take this account, to take this trade, divided by 4 or 10. And again, if you want to do multiple trades, you've got to have the margin to do them and the wherewithal to monitor them all at the same time very, very quickly. And that's a lot to do. I would say if you want to make more money than this, then do 6,000 shares. Do 10,000 if you want. You'll get filled. Every single stock that we are doing has volume. We're not doing anything that doesn't. And so again, I would just up your size if you want to make more instead of doing 1 million trades. Anyways, it's about following the system. Focus on quality, 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 quality. I cannot stress how important that is. If you get up in the morning and something there, that's probably not going to happen right now for weeks because it's earnings season. But if I do happen to get up tomorrow morning, there's nothing to do, then we're not going to trade. You're not going to force a stock to move. You're not going to make it move yourself. But it's, the room is a good environment. People are focused, ready to go. We trade, we make money, we're in, we're out, we're done. Okay? It's a mindset. People come into the room expecting to win. I expect to win. I get up and expect to win. And that's, a new concept for a lot of people that get up in the morning and trade and risk money and expect to lose. A lot of times people are like, they're like, well, I don't expect to lose, but they have a 50-50. When I take a trade, I don't have a 50-50. I don't feel like that. Yes, I put the stop in. You have to do that. But I feel like it's going to work. I feel like 100% conviction, and that is very important. And again, getting back to your mindset, all of that's important. But like I said, we chunking it out, one trade a day. If I make money, I'm done. It's very rare I would do two things, and if I do, I probably lost in the first trade, and then I'm doing a second one. It's very rare I would be in two things at the same time, set up at the same time that I both like, that would both go. So I narrowed it down, and it's like I said, getting the fast trade, and there's times things keep going. Today was a good example of that with the Schwab, but for me, it's about working smarter, not harder. Things tend to get choppy as the market goes on during the day. And again, today worked out. The market kept going after it fell off, and again, I didn't see where Schwab closed, but it probably closed higher. I know it closed higher where I got out of it. But trading in the morning is a very important time, okay? Any other questions here? How are we doing? Any other questions from anybody else that's been asking questions? Any questions from anybody that hasn't asked questions? Okay. So anyways, number 3, you want to become good at one thing. And again, focusing on one thing is all you need. All you need is one good trade. And then you can add the size, because the consistency really keeps you on track. The rating system is the structure. You fill out the worksheet. Having the structure, it's invaluable. Like we were talking about exercise and diet. Structure helps for those kinds of programs, and the same thing happens in trading, okay? If you have a structure, you will be less in your head and worried in that fear bubble, and less in that gambling mentality, which unfortunately so many people are with their tradings. So again, how are you going to know what's talk to trading today? You get up in the morning and you rate the gap. You find gaps and rate them using a checklist. This is what you'll learn from me in the class. Gaps have to be qualified. You can't just do every one in the direction. You can't do every one in the opposite direction. It doesn't work like that. It's not that simple. The checklist tells you what to look for in the price of the stock to know if you want to do it. Should it be clear, is there a weekly email for options? No. There could be a trade every day. Or there could be no trades tomorrow, or 3 trades Thursday. If you're talking about day trades, if you're in the room in the morning, Tanya, and I call a trade, you could do the trade live. Is that what you mean? But that's a day trade, not an option. Okay. Again, I will call you tomorrow, Tanya, because it's late. I got busy today, but I will call you tomorrow if you're going to be around. Do I teach the options trade? Is the gap trade concernable to the options trade? I don't know what you mean. Do I teach the options trade? I teach the rating system. If the gap rates 22 points and it's gaps down, you can buy a put or you could short it. So it's the exact same read. How you take the trade, okay, Doug, if you want to do it as an option or a day trade is up to you. Sometimes I'll call the same trade in the same ticker. I could have today. I didn't in Schwab. I just didn't. I could have called a call in that. But honestly, I'm already in calls. And I just said, I'm just going to kind of play out the stuff I'm in. But if you were in the room with me when I called that trade and you didn't want to do the day trade, you could have bought the $80 calls that expired Friday. You could have just bought them yourself in the room. But I didn't call a call in that. But it's the same thing. You're looking for the rating. Because again, if you get the direction correct, it doesn't matter how you do it. You could, and I don't do this, but you could even do it as a swing trade. I don't do that. But you could. Or a long-term investment if you want to. You could do that too. So I teach the rating system. How you take the trade is up to you. I'm telling you I do options, and I'm telling you to do day trades. And why do I like both? Well, it's easy. I like day trades because I can get out quick and fast and easy, and by 4 o'clock I'm flat, and I know exactly where I'm at and how much money I made or lost by the end of the day. I could be in an option, and I have no idea what's going to happen tomorrow. I could be in the trade and I'm in the trade and it's Monday, it's Tuesday, and I go to bed at night, I don't know what's going to happen the next day. But I get bigger moves taking options because I get the overnight move, which I wouldn't get in the day trade, so I can have these big, fat, gimungo moves like Tesla. So it is, I'll never get 1,000% return on investment, or I shouldn't say never, but, you know, there's times I'll hold a day trade. But, you know, to say I'm going to make 1,000% in 5 minutes in a day trade, I'm not saying it's impossible, but, you know, that's rare. You know what I mean? So you can have the bigger moves by holding overnight. And that's what I like about options. And again, it's a fixed risk. So if the trade goes bust, I'm in the wrong direction, something happens crazy, and Trump says tariff, and then everything goes against me, well, then I lose what I risked, and that's it. Do you know what I'm saying? It's not totally unlimited risk. So that is the benefit of options. You get the overnight move. People think the benefit is you can trade options with a small account with $2,000. That's really not the benefit. The benefit is capturing big moves and overnight moves where you can get, you know, risk $1,000 and make 10 grand in a couple of days or a week. And that happens with me. The way that I call trades, I'm very on point in reading the direction. Anyways, I prefer to shorten the room though, because trades go fast in the room. But again, Schwab today was a long. It was a long. I mean, it just was, and it was a good trade. But I prefer shorts because of panic. So again, if you want to come and learn from me, the system tells you how, when, and when. How to make money in the market, trade a strategy and system that's profitable. Golden gaps are a highly profitable strategy because they focus on large momentum to trade. What stocks should you trade? Only stocks that gap and rate 20 points or more per the Golden Gap 26-point rating system. Trade the gap in the direction of the gap, and when you trade them, early in the morning in the open when they set up and trigger. And you must have a structure in place in order to make any money. $1 consistently. You can't do it every day if you don't know what you're looking at or doing. It's about the consistency that many traders lack in their system, and a lot of traders also don't have systems. If I ask people, sometimes I talk to them on the phone, they call me, ask questions, I said, what's your strategy? Sometimes people say they don't have any, and sometimes people explain something to me, I said, nope, that's not a strategy. That's an entry. And people are like, oh, ooh, I didn't think about that. So a lot of times people think something they're doing is a strategy, and I'm telling you, it's not. Okay? If many stocks gap up or down, do you show or teach how to narrow it down to one or two trade for the day? Yes, I teach that in the class. The class is a class on shorts. The class this weekend, Saturday and Sunday, is a bearish class. I did not teach the bullish class at all in 2024. I probably should sometime in 2025, but I don't teach the bullish class every month. I only teach the bearish class monthly because we're mostly shorting in the room, and there's limited interest in the bullish class. So I don't work 2 weekends a month. I work usually 1 weekend a month where I do the class like this weekend. So if I call a bullish gap, you go with it with me in the room. The bearish class is what I'm doing this weekend. How do I know ahead of time where stock will go? I rate it. And again, I use the 26-point checklist. This is the meat and potatoes with what I do. This checklist tells me what to trade each day and what to look for. And that's very, very important. And this will help you stay consistent. But again, every day I'm trying to find, number one, a high probability of directional bias for the entire day. Schwab did that today. Big move of the day. Guess what? Schwab did it. Early confirmation of the bias of the move between 9:30 and 10. Schwab did it. And precise entries with follow through and a good risk to reward target potential, which Schwab was. So, this is, I've been doing this for a very, 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 very long time. And it's not even that, because I go to these webinars, these places, these things, these events, and there's people that are trading longer than I'm alive, but they're teaching 25,000 different things. And I'm only doing one. This is it. This is all that I do. And this is why I'm good. So again, I'm not doing futures, I'm not doing Forex, I'm not doing crypto, I'm not doing this, that, the other thing. I'm not doing fancy dancy options. Everything I do is based on the gap. That's it. And this is why I'm really good at what I do. So again, all you need to make money is one thing. That's it. I cannot stress that enough. It was something that I realized, no one told me that when I first started, but I realized that very quickly. And again, when you're, when you're being bombarded, which when I started trading, again, I signed up for things that was bombarded by all kinds of stuff from all over the place, this thing, that thing, the other, you quickly realize that a lot of it's crap and that you really only need one thing. And you really only need one trade. Are the classes recorded? No. No recordings and no recordings allowed. You cannot review anything later except for your notes, which you will take if you're there live. So you got to take notes. You got to have a notebook and you write it down. And you pay attention and you're there live and you ask me questions. And I allow people to email me or call me after the class to ask me questions, which is something that nobody does. So even after you pay, I'm not going to disappear from your life. So that is something very special that I offer people. You can call me on the phone and say, I have a question. Or basically, the room is the best time. After we're done trading, though. After we're done trading. And you can say, well, I don't understand, why did this one work or something? And then you can ask me a question, because the room is best because I have the charts up in the room. But you certainly can call me, or you certainly can email me. And people do. Anyways, put a plan of action in place. Trade only gaps that rate according to the 26-point rating system. Get the best entry you can. I'm trying to make 1-to-1. Again, I could have made more than that today with the, I made a little bit more than that, but I could have probably made 3 R's today in that Schwab. I just didn't hold it. So where you want to get out, if you want to hold a trade past where I get out, that's your decision. Create a money management plan for yourself. Again, goals. I want to risk this much of trade. I'm going to do 1 trade a day. I'm going to do 2 trades a day. I'm going to do 3 options a week, whatever. You have heard me say you had a good feeling that gap would be good. So how much of your stock is subjective versus objective? Nothing is subjective. I don't know what you're talking about where you say I had a feeling. I don't know what you mean. I don't remember what I said. I can tell you I have a feeling right now Tesla's going to 500. Doesn't mean I'm in a trade that I'm going to hold it till there. So 0 is subjective, to answer your question. I don't know what you're talking about, though, with what I said. I can say I think the market is blah, 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 but that's not how I trade. I'm not in a 500 Tesla call. I think it's going to 500 sometime in the next 12 months. But I'm not in a long-term leap or option. So I can talk and say things like that. That has nothing to do with my trades. There's a difference. When I go on television, I'm saying what I think about the market for the year or giving a market call. It doesn't mean I'm in any specific trade that I'm discussing right then when I'm on television. The system that you will learn, the point rating system, is based on the daily chart. And that is not subjective, and it's something that any person can learn and use. But you got to have charts. That's different from me giving my opinion and saying I think Tesla's going to 500 or the market's higher after the inauguration, which I thought, and I was right. But you don't trade on that. You trade on the gap. Anyways, I think 2025 is going to be a good year to trade, a fun year to trade. This is me. I taught a class last year live in New York, but the class this weekend is online. You can do it. This is real. I think it's important to have a positive attitude, but you want to be professional about it just like you were running a business. And that's what I do every morning, get up and rate my gap. And I'm running a business too. So it's just my mindset. I'm very analytical. So this works for me. If your person has a hard time focusing, you're gonna have a tough time making money. You really have to focus. So empower yourself today to trade. If you want to learn it, you can learn a complete system. You learn the entries, you learn the exits, you learn the targets, and you learn the 26 points in the Golden Gap course. So this is a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. Class is online. You can be anywhere in the world and take it. Class tuition is $69.99. And again, it is this weekend, Saturday and Sunday, the 25th and 26th, 9 to 5. You could be anywhere in the world, but the class is Eastern Standard Time. So it's $6,999. Everyone pays the same. And again, if you want to sign up, I'm running a special through this Friday, the 24th, which is a great special because it gives you the market report, the stock swoosh trading room, and the options newsletter subscription through the end of 2025. So this is a good special. I was running it through last week and extended it through Friday to give people more time to sign up and pay. I know some people are saving. It's worth it, but it's up to you if you want to trade, if you're ready to do it, and if this is really for you. Any other questions? You're analytical as well, so it helps. That's good. But don't be over analytical. Don't overthink something so much that you don't have any conviction at all. that you second guess yourself, that would not be good. So again, 2025, do something different. You can do it. You can do it from home. And I think it's important for people to seriously think about their future. But it's earnings season right now, and it's definitely a good time to trade. What is the class schedule? Breaks, lunchtime? You're in the West Coast. Well, the hours are 9 to 5. We take 1 hour lunch break, somewhere between 12:30 Eastern. And we will take a little morning break and a little afternoon break for 10 minutes for coffee breaks or bathroom breaks. I will do that for people in the morning and the afternoon. And again, if we end at 5, we end at 5. If we have questions, we go past 5, we go past 5. I don't rush people if they have questions at the end. So sometimes we go a little over. Anybody else? Something else I was going to say and I forget. I don't remember. Tanya, how are you doing? Dan, I see you there. I don't know if you can't do the class, you can't sign up, Dan. Doug, I don't know if you have any other questions. Bob, boom, boom, I see you there. I don't know if you're going to join this year or not. Some of you I know have been following me for a while. 2025, that could be your year. Dan, do you have questions? Tanya's already joined. She's going to get organized. Again, the nice thing about this special is that, again, you don't have to feel the pressure of quick learning it to pay for the room subscription, like if I only would give 1 month free. You pay for the class, you have the whole year. No one's even forced you to do options at day trades. Just start with one thing. If you're used to options, you like options, you can come into the room every morning, even though we're doing the day trades, hear what I have to say. You're going to get the newsletters to your email. You don't have to, oh my God, I got to quick make this money back in 90 days or something. You have the rest of the year. It's a long time. It's a lot of trades. You shouldn't feel rushed. You can focus on the learning aspect of it, which is extremely important. And again, this is what I'm trying to stress for people. But, during the week, we're making money. Like, you can't discount that. And I got to be in trader mode to do it. We do the reviews after, or the days that we don't trade. Well, you should think about it then for February, Dan. I gave you the February dates. Doug doesn't have any more questions. At open stock price, an option price will be very volatile or think or swing. You've seen price freeze up at the open. Well, I don't know what you mean by freezing. Nothing that I'm trading is freezing at the open. But sometimes things open late. I don't know if that's what you mean. And you wait till it opens. But, again, that's something that you should talk to your broker about. Right, well, that's what I'm talking about. Then it opens late. Yeah, sometimes things open late, and nobody can control that. You won't be able to get in the trade until it opens. Me, not you, not anybody. Tanya, I'm going to talk to you about that on the phone. Because I know you're going to need help with that. And when you said to me you don't have a broker, you actually do have a broker. But we're going to talk about that on the phone. Listen, have a wonderful, wonderful, wonderful evening. If you have questions, email me at melissa@thestockswoosh.com. And if you're interested in the class, email me. And the deadline is Friday. Pre-session and post-session trading. I don't know what you mean by pre-session and post-session. The room opens at 9 a.m. The cutoff to enter is 9:20. I get on the mic like a minute or two before the open and we trade. If you log in at 9 a.m., I'm going to put every ticker symbol that I like. There's no pre-session. Boom. The trade sets up. We're doing it. Now, if you have questions, we can go over the questions when we're done. But I don't know what you mean by pre-session and post-session. I am never trading outside of the open hours of the market. The stock market opens at 9:30 and closes at 4, and I'm usually in and out of trades in several minutes. So I was in and out of Schwab today in a few minutes. So whether the fact that the market closes at 4 absolutely does not mean that I'm in a trade all day till 4. I don't know if that's what you mean, but I'm not trading outside of market hours ever. Thomas, okay, well then you figured it out. That's fine. Okay. All right, listen, have a great night. I'm going to save my voice for tomorrow and the class this weekend and snuggle in because it is 5 degrees in New York. And tomorrow it's going to be like -5. All right, see some of you in the morning. You're welcome.